Hey, let's talk about why you're hesitating to take perfectly good trades and what to do about it.
Let's trade.
All right, guys, so what I want to do is give you 3 or 4 scenarios on why I think you might be hesitating to take good trades depending on your system, and then what to do about each one of those scenarios. And this came from a question on one of my previous videos, and we can get right into that. So the question is, this is a paraphrase, but been trading for about 5 years, have a profitable day trading system, but I'm still hesitating to execute trades. Any tips? And full disclosure, I'm not a day trader, but I think the things I'm going to talk about can apply to day trading. They can apply to swing trading, position trading, even probably, and depending any kind of vehicle you trade, whether it's options or stocks or futures, it really doesn't matter. Used cars, I think it probably doesn't matter whatever you're trading. Um, so reason one, I think, is maybe you haven't used your system long enough to really trust it. Uh, and that can be the case whether you found this system, whether you got it from a book or from somebody else. You really need to trust that your system works, right? Every system, regardless of what the YouTube gurus are going to tell you, every system goes through periods of drawdown or periods where the environment is not right for that system. And so you're going to have to be able to sit through a drawdown or sit through some losing trades and just trust that your system's going to turn around at some point and work for you in the end. Um, and so sometimes if you haven't been with a system long enough, you just really don't trust it yet. You start to think, oh shit, well maybe I had a lucky run and now the system's showing its true colors and I'm going to be losing a lot more now. Um, but a couple things you can do about this: you can back test with data if possible. So what I mean by that is, if you use Python to access like Polygon's data, or you can do that a million different ways. That's the way I do things. It's just kind of how I learned. But you can get data from a bunch of different sources. Depending on what vehicles you trade, and you can manipulate and gather and manipulate that data through a bunch of different ways. You can, as easy as downloading data from right from the what's the word I'm looking for? Right from the exchange data. You can download the data right from the exchange and use an Excel file to manipulate it and backtest it based on if then statements in Excel. I've done that too before I learned how to use Python well. I shouldn't say well, good enough. Yeah, I used to use Excel. So anyway, if that's possible, do that. If that's not possible, you can backtest manually. That means going using something like Thinkorswim's on-demand platform, or there's a bunch of other ones out there where you can go back and look at a day in the stock market and play it like it's happening right now, and then you can manually test your system. And that way, basically, you're just saying, okay, historically, has this system performed, and how has it performed? What do the drawdowns look like? How long does it spend when it's in a drawdown? How long does that take? Is it just a few days? Is it a few weeks? Is it months? What's that going to look like? And you get to know your system a lot better and recognize what might happen in the future. Again, history isn't necessarily exactly what's going to happen, but it gives you an idea. What's your win rate like? What does your profit loss look like, or your average win to average loss, however you want to say that, right? You can start to learn that stuff a little more thoroughly about your system. If that's not available to you, if you can't go back and manually test, then you're probably just going to have to be patient and continue forward tracking. Maybe that means with smaller size, while you're figuring out whether the system's really profitable or not. Or maybe that just means paper trading, no size at all. But that's your only option at that point. But I think if you really want to make it in this game, you'll figure out a way to do one of the first two options. You can open an account with Schwab with just a few dollars and get access to Thinkorswim, and then use their on-demand platform to go back and manually test. So there's really no excuse for not being able to do one of the first two options. So yeah, I think once you build that trust, you'll probably be able to execute without more hesitation. Okay, reason number two: you have too much discretion in your system. This is leading to not only hesitation, but also after the fact shoulda bullshit, right? So, what I mean by that is if you've got discretion in your system, that's where you don't really have a really well defined criteria of what your setup looks like, and there's a lot of decision making that's left up to you. That can work really well. There's a lot of traders who trade like that. They do really well, and there's probably always going to be some discretion in your trading. Especially the more seasoned you get, the more you kind of get that gut instinct of like, yeah, this is meeting my criteria, but man, it just doesn't feel right. Like something's off here, and you just kind of sit back, and then you go, and then maybe you find out later what that feeling was. But anyway, if there's too much discretion, then you can always, after the fact, you can always should yourself into like, oh, I shouldn't have taken that trade because X, Y, Z that I didn't notice. Or if you passed on it and it ended up working out, oh, I should have taken that trade, right? You can do a lot of that. Whereas if you have really well-defined criteria and you just enter based on your criteria being hit or not, you sit out if not, then there's no ability to should yourself later, right? To be like, oh, I should have done that, I should have done this. No, your entry, your system is this. You can maybe rework your system to make the criteria different if that happens often enough, but you just you don't have to be so hard on yourself. So because when you start doing that, then that's when you start hesitating, right? Because you're thinking, oh, am I doing this right? Is this one of those ones that I'm going to pass on and it's not going to work, or it is going to work, or am I going to take it and it's going to stop me out? I've had 3 stops in a row, blah, 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 right? So if you can try adding more specific criteria to your entries, exits, stops, your whole system, right? Okay, when the moon is in the second house and Jupiter aligns with Mars and the 20 SMA goes from downslope to upslope, I'm gonna go long, right? Or something like that, right? Those are very specific criteria for entries, and then you're gonna say my target is or my stop is 2% and my target is 3 times that or whatever, right? Okay, you've got a really clear system there, and I don't know how long the Jupiter aligns with Mars or whatever, but it's you're going to trade like that for a while, so that would be cool. Obviously, you'd have more specific criteria too about what types of stocks or what vehicle you're trading and what qualifies, what doesn't, all that kind of stuff. Hopefully, if you've got a good system, and that's where a lot of people like being systematic traders for that reason, because it kind of takes all of the pressure or a lot of the pressure off of you. In fact, you can just kind of, if you're really good with coding, you can code your computer to do those kind of things for you. They just enter and exit for you, and you don't even really have to do much except babysit it and make sure make sure that you didn't, add an extra decimal point to the code like like Michael Bolton in Office Space, right? If you don't know that movie, go watch it. It's hilarious. So the only thing you need to do there is also practice quickly identifying the criteria and being able to execute if you're going to do it yourself, right? So I think I covered all of, I covered all the other stuff in that paragraph there. So we'll move on to reason number 3. You're sized too big and losses are emotional to you or for you. I think this is likely probably the most common one that I see in traders, and I'm not even going to say new traders, but all traders. If your losses ruin your day or your week, or God, your month or your year, even worse, but even if they ruin the next 30 minutes, like if you take a loss and then you leave your room and you're a dick to your girlfriend or your wife, like that's not good, man. That's losses are a part of trading, and if you can't take them and just move on, then there's a problem there. And if you're afraid of losing, I think I just glitched. If you're afraid of losing, that can cause some definite hesitation, right? Because every time you enter a trade, you're thinking about, oh shit, what if this turns around and stops me out? What if this takes out my stop? I'm not ready for that kind of loss. Then you're going to hesitate on stuff, right? You're not just going to pull out the cannon and shoot for it. So the to-do here is size down, and then keep sizing down, and keep sizing down until your losses no longer affect you like that. They don't ruin your day. They don't even ruin the next 5 minutes. Okay. Um, and then you get to a point where if your losses don't bother you at all and you're okay with taking losses, which you should be if you're a trader, because you should have well-defined risk criteria and all of that. And so a loss shouldn't really mean anything to you, especially if you're confident in your system, right? Back to, I think, reason number one. Because you know, like, oh yeah, I take some losses. My system takes, on average, 4 losses out of every 10 trades, and it's not a big deal because I know the other 6 winners are gonna more than make up for that, right? But so your losses don't affect you emotionally anymore. Then you won't be hesitating anymore, and then you slowly size up when you're used to that level of risk. You slowly increase it, and you get used to having bigger losses and bigger wins, right? And this is different for everybody depending on your background and how much money you're starting with and where you're coming from and all of that. There's some traders who might step in and they come from a wealthy family, so losing a couple $1,000s is nothing to them, right? I had a buddy like that when I first started trading, and I was I was not in that situation at all, right? So to me, like, losing $100 at that point was like, holy shit, I'm gonna cry. And he would be like, yeah, I lost like 3 grand today, and I was like, oh fuck. But so it just depends on who you are and where you're coming from. Somebody might have to size down to only losing $1,000 per trade, average risk, and then somebody might have to size down to only losing literally $10 because that's what they're comfortable with. And yeah, that's fine. That's fine. Just get down to a place where it takes the emotion out of it for you, at least to some degree, and then slowly size up from there, and you won't have to have that hesitation problem anymore, right? Because you're used to that risk. You can't. What I said here at the bottom, you can't exercise. Oh, Jesus, you can't execute from a place of fear, only from a place of confidence. That might be the most intelligent thing I've said all day. So take that one to heart. Okay, guys, so I wanted to make this a quick, short, to the point video, and I think I did that. If I missed any reasons, definitely drop them in the comments. If this was helpful, hit the like and subscribe button, all that shit. I hate saying that, but really you do have to remind people to do that. All right, guys, until next time.